Hi, you're watching BloombergQuint. We're discussing the budget all through the day today. And this evening, I have with me three people to bring to you not just the big picture, which is the macro, but also the micro implications of what Finance Minister Nirmala Sitharaman announced earlier in the day. Let me introduce my esteemed panelist, Kiran Mazumdar-Shaw, Executive Chairperson of Biocon, Thiagarajan, Managing Director of Blue Star, as well as Chairman of CII Western Region, and Ashok, Wadhwa, Group CEO of Ambit. And Mr. Wadhwa, if I can start with you, because I know that you have often found things in the fine print that even the best of veteran journalists rarely have. What does the fine print reveal to you today?
Interestingly, the budget this time was not just short, but quite precise. And I have to say that the speech and the memorandum actually aligned itself quite well. The only thing that she didn't cover, which is positive news, I would say, is that if government sells a public sector enterprise, which is a loss-making enterprise, I guess Air India to begin with, then under the tax law, the losses of that loss-making enterprise can actually be carried forward. The law otherwise is that if you're an unlisted company with accumulated losses, then those losses cannot be carried forward when there's a change in control. The benefit of carry forward losses is available only to listed companies, not to unlisted companies when there's a change of control. That's the one thing she didn't point out, but I guess that's because it's obvious, right, that if the Tatas are going to buy Air India and Air India has accumulated losses, then that deferred asset, the deferred tax asset, will be available as a set-off. So in all the calculations that we are doing, perhaps we all missed out the fact that there is accumulated loss, which loss is a benefit to the Tatas because they won't have to pay tax going forward for X number of years. Other than that, honestly, she got it covered quite well, Menaka, but that's also because I said the budget this time was concise, the speech was concise, and the two were very aligned to each other.
And this, I think, has been the consensus view across business leaders, economists, even those in the capital markets, that the numbers all seem believable. In fact, might even be, a little bit on the cautious or conservative side, right from the GDP growth numbers to the revenue numbers, including even the divestment number, Mr. Wadhwa. You found faith in all of these numbers?
As a matter of fact, reminded me of Michelangelo's old saying that I hope we are not aiming so low that we achieve it very easily, because you don't know what you really missed. And apart from being very real, I think, and being very conservative, my concern is that they're too low. I mean, if you just look at the GST number for this month and extrapolate that going forward, you'll probably exceed the revenue collection by a mile. Equally, the divestment target for last year was 1.75 crore. Now, given that LIC constituted a very large part of it, and obviously LIC is going to get done this year, we know that now. A target of 65,000 is a very, very small target, particularly with the demonetization, the monetization of asset program that she has, embarked upon. She began with NHAI and she then did Power Grid. She can do GAIL, she can do NHPC. She's got many other power assets, generating assets. So my own view is conservative, sure. I hope not over conservative, because we don't want to miss the opportunity of being able to collect more and be able to divest more.
Okay, and that's a fair concern, but even if we were able to collect more, where would we spend it? And I think that comes to the core question that the budget seeks to tackle. I think the finance minister has made a tough choice and put pretty much all of her eggs in the capex basket, and very few of them in the revenue expenditure basket or the income support basket, so to speak. Mr. Thiagarajan, how do you view this trade-off? Because capex is great, it's quality investment, it has a multiplier effect, but there is a gestation issue to it, there is an execution challenge to it, and there is also the viability question that comes in. What the economy needed, as some would say, was an immediate bump up in consumption over the course of the next 3 to 6 months, and no budget effort seems to be directed towards that.
Thank you. That's a great question. I think it is in the right direction to put money in predominantly in the capex part of it, because anything else you do, it is not going to give you the long-term benefit. She began by saying it is a 25-year kind of a plan. Prime Minister goes on to say that it is building India for 100 years. But the fact of the matter is that putting it in the capex part of it helps a lot. Now, it creates employment. In order to improve our competitiveness, this infrastructure is a very important thing. It is actually very frustrating quite often to run a business with such a poor infrastructure in the country in its 75th year of independence. So it is consistent with last year's theme. So we have to maintain this for at least 3 more years or 4 more years in order that we are able to sustain this growth. Remember, this economic GDP growth that we are talking about, it has to happen for at least 5-6 years consistently at 8% plus. We are on a small base. We have just managed to reach FY19 level, and it was not FY19 we were doing greatly in terms of GDP. So it has to be maintained in this particular level. For that, this infrastructure is important. On the other hand, if we want to connect with the global supply chain, it is very important that we improve the competitiveness. And for building this competitiveness, infrastructure is a very key element there. And I often keep telling that half the energy of the top management goes in this kind of frustrating issues, which our peers across the world will not give.
Mr. Thiagarajan, forgive me for interrupting you. I have no quarrel with infrastructure spends at all. I wonder if you think that the balance between investing towards, capital projects and what is needed in terms of the more short-term mitigation towards the lower income households, more spend on healthcare, more spend on education, more spends that would boost consumption, let's say for products like yours, was that something that was sorely missing in this budget?
I don't think we should go in that path at all. As of now, even if you look at the subsidies, there is a lot more to be done. A lot of money is getting wasted out there in the form of subsidies in many sectors. So put the money in the infrastructure building and other capex so that there is employment generation. Employment is the solution. Of course, one can argue that the infrastructure related employment is permanent or it is only temporary, but I think it will be a permanent thing for taking the poverty out and putting more money in the hands of the people. So I am of the view that it is not necessary to go and give some schemes in order that momentarily the consumption will go up at all. If you do this, consumption will come back. In that particular matter, I will also tell you, the PLI schemes also, in my view, it is putting the money in the hands of the people, not in the hands of the investor at all. Because any PLI given to us, it is going to be discounted in terms of price. So I can talk about the air conditioning industry, that the capacity is doubling in next year, 12 months to 15 months. You will see the production capacity after many decades are doubling. Now, the consumption has to go up in order to earn the PLI itself, because PLI is paid on incremental sale over FY21. So if every one of us have to earn the money, we have to go ahead and grow the market. And if I build the scale, the cost will come down. In other words, what I'm driving at is the air conditioner prices. I foresee 15 to 20% reduction automatically because of PLI.
Okay, and you are expecting that price reduction will in itself help boost consumption over the next 6 months to a year?
That is right. All the PLIs are going to boost the consumption.
Okay, that's interesting. Ms. Shaw, do you take the same view on this trade-off that the finance minister has struck? All budgets are tough choices. We're just trying to examine whether this one stands out for a particular skew in that sense.
Menaka, first and foremost, I kind of commend the finance minister for not, being prey to a populist budget, because remember, this is election time.
I know.
And you would have thought that she would have come up with a very populist budget, which she didn't, and I must commend her for that. And I think it is a very growth-driven budget, because I think the government is very keen to create a strong and sustainable economy based on really a couple of things. One is, of course, infrastructure investment. Secondly, of course, I think the government is very keen to look at a digital economy, which is basically driven by various digital platforms, including digital governance, digital healthcare, digital education. And I think that is also a good investment for the government to get into. Yes, your question about have they neglected the middle classes? Have they basically missed out on, giving some inducements to the people who've sort of been laid off or lost jobs during this pandemic? Yes, that can be argued that maybe they could have been, they could have done something, because you are going to get a much higher tax collection this fiscal than what was estimated or envisaged. So what could part of this extra tax be used to help some of these people who are stressed is the moot question. But on the other hand, I think you need to uh, get this economy on its own feet. And to that extent, I think opening up the economy is where I would go. And I think that's what the government needs to get into. We are well vaccinated, and I think we are safe enough to open the economy. And I think state governments have a huge responsibility to open up the economy and get the services sector, back on track, because that is really where the consumption is hit. That is where you're seeing the financial stress. Obviously the capital expenditure has a lag phase. It's not going to be immediate. It is going to be mid to long-term kind of paybacks, and the visible signs of growth is only going to happen after this lag phase. So yes, everything is directionally, correct. And I think it actually sets us onto a very, very predictable growth path. So that way, I think this has been a good growth-oriented budget. As I said, I'm quite impressed that they didn't kind of yield to the pressures of getting into welfareism. But on the other hand, I think execution is going to be key, because I think whether it's divestment, yes, they've calibrated the divestment down, and I think to Ashok's point, have we lowballed everything in a very conservative way is the question. And I divestment track. And I think Air India is a good indication that, when you do that, you actually create efficiency, you create a business growth, because, the private sector knows how to market and grow the business. And I think that's what we really need to focus on. There are many assets that need to be divested and privatized. So
Recording
I think
stopped. Recording in progress.
Ms. Shaw, I'm sorry to interrupt you, but I just wanted to know, you're not disappointed by the lack of more ambitious efforts in the healthcare sector specifically?
Well, in the healthcare sector as well, they focused on universal healthcare, digital healthcare, the universal health ID. I think they're really trying to invest in creating a very, very robust digital architecture for many, many sectors, including education. So I'm not disappointed in that respect, but what I really was only disappointed in my sector was the lack of understanding the need to invest in R&D. I was expecting research-linked incentives, I'll be very honest. And I think that is the need of the hour for our industry. And for many industries, I think R&D needs to step up. And I think no one's going to invest in R&D unless there are incentives, especially in an industry like ours, which is really high risk and gestational payback when it comes to R&D investments. And otherwise you'll keep investing in predictable low risk R&D, which is really not the way we should be growing. Right. So that is a big disappointment for me. And I hope that, of course, budget is only a one-day event. I hope it's an evolving space, and I hope that the government understands the need to really invest in innovation and research. So that's the only disappointment from my point of view. But other than that, I would say I'm quite pleasantly surprised that the
Recording
government
stopped.
actually, I think the government actually invested.
Recording in progress.
Rather, the government actually created a very growth-oriented, bold budget, I would say.
Okay, Mr. Wadhwa, I mean, you made the point about whether they're undershooting on the divestment side. And my question to you is, what would they do with more money unless they were happy to spend it on the revenue expenditure side? Because at this point, a 7 lakh crore rupee budget for infrastructure spends for the next financial year just seems like a mammoth execution task to pull off in 1 year itself. So I come back to the choices that the finance minister has made and how you view them.
Honestly, 3 points on that, Menaka. First, remember, capex, particularly if it's related to infrastructure, needs longer term planning.
Sure.
Needs greater gestation, and therefore needs advanced execution plan. Revenue expense, on the other hand, you can incur kind of as you earn, right? If the tax collections are going to be more bullish, as we all expect, I think the government will get many opportunities. There are enough and more places where the government needs to incur that expense, and we've already spoken about some of them. The broken SME segment is clearly one example. So my view is that you don't need to plan as well for revenue expenditure as you need for capital expenditure. Country is no different than any business. And as you earn and you see buoyancy in your revenue, you will keep incurring that. There's just 2 other points I'd like to point out. One is, we are ignoring the fact that this government started planning PLI 2 years ago. The first PLI program was announced 2 years ago. And if we accept the fact that manufacturing creates long-term and sustainable employment, then that plan began 2 years ago. They have added many sectors over the last 24 months. But the first plan was issued when they came out with air conditioners and Mr. Thiagarajan's business 2 years ago. So here is what I would say. The plan, the understanding that we need to create more sustainable employment opportunities and that manufacturing does it better than everybody else was understood, and the plan began 2 years ago. We are only seeing a culmination of that plan today. On the other hand, I wish they had understood, as Kiran rightly pointed out, that just like manufacturing, the other big edge that India has in a globally competitive environment is our IP. And IP needs to be nurtured and built. And like CapEx, that's a very long cycle. I wish they understand that and they had provided adequate incentives, not just to the pharma industry. I would argue and say that, given the disruption in China and given the amount of capital India is attracting at this point of time, India is second only to the United States in innovation now. If you look at the number of unicorns that are coming up, if you look at the number of SaaS products that are being delivered out of India today, I think that's a huge opportunity. And the nice thing is that it caters to our younger population. It caters to our strength of entrepreneurial spirit. And with the access to capital now, I wish government created more incentives for pharma, for healthcare, for other IP-related businesses to say, go, invest more, take more risk, because that's really where you're going to get global winners.
Okay, so if I understand you correct, Mr. Wadhwa, you're saying that you believe that this budget leaves scope. If it does overshoot its targets in terms of revenue, it leaves scope for enhanced revenue expenditure as the new fiscal sets in. So it might not be on paper right now, but it could take place, whether it is an extension of the food grain program or the Manrega program, which has been so critical over the last 2 years. You think that some of that revenue expenditure may not be budgeted for, but if taxes, divestment revenues, etc. come in, they will in fact push towards that as well.
I'm actually super confident that they're going to collect more, they're going to divest more, and they're going to spend more. And that there is a deliberate, because one of the big criticisms over the last few years of this government is that they have been over-optimistic.
On divestment, yes.
And therefore, the numbers are unreliable. I think they're trying to address that one fallacy within their thinking system and saying, all right, I'll give you a set of numbers that you think are not wrong. And you know what? If I beat them, like every other, good service provider says, I would rather beat what I give you than fall below what I tell you. And if I beat that number, there are many places and many opportunities for me to go spend the money. And I think you will see many more avenues from the revenue side where these additional collections and additional divestment proceeds are going to be spent. And I think I'm optimistic that at the end of it, you won't see any reduction in either the Manrega, or you will see good sustainable programs for those who have lost jobs and who are suffering because of the whole COVID development.
I have one more follow-up question to you, Mr. Wadhwa, before I take it back to Ms. Shaw and Mr. Thiagarajan, and that is, how do you perceive global investors, both portfolio and direct strategic investors, will assess this budget? We've seen, very substantial portfolio outflows over the course of the last 4 months, not necessarily entirely for local reasons, for global reasons as well. We also saw today yields hardening, and it does look like that curve is going to become a little bit more challenging for us over the course of the next 2 months. What's your assessment of how attractive India looks for global investors at this point?
So let's just break it into the equity part and the debt part. The hardening of the yield today curve was largely because of the 15 lakh government borrowing program. As government delivers better than expected numbers, both on revenue collection and divestment, I personally believe that number will go down. And as there is greater and greater visibility that really collections and divestments are going to drive that number down, you'll actually see the yield curve come back to a little more normal tenure.
Okay.
As far as equity is concerned, let's break it into 3 parts. The FPI money, as you rightly pointed out, nothing to do with India. There is absolutely no push factor. There's a pure pull factor from the United States. Every time Fed sneezes, we know the world, particularly the developing world, suffers. We're going through that challenge at this point of time. As far as FDI is concerned, break it into 2 parts, what I would call long-term strategic FDI, and lots of capital for new ventures and new opportunities in India. As far as the larger strategic capital is concerned, I think India continues to be a very attractive destination. And I continue to see lots of interest from global players, both strategic and in particular private equity investors with desire to want to take controlling positions in this country. As far as new capital is concerned, again, very bullish about how the younger generation is seizing the opportunity, coming up with some incredibly bright ideas. And the good news now is there is no dearth of capital willing to back them up. Not everybody will be successful, but some of them will really hit the ball out of the park. And then, that hopefully will work very well for everybody else.
Okay, so you sound very positive about the growth momentum that we seem to be building. Ms. Shaw, do you feel that way as well about the broader economy, not just your sector? And there's one more follow-up question I want to put to you. I think what came to me as a surprise in the budget speech was the policy or the law to replace the SEZ Act, given the sunset clause just kicked in a little over a year ago. And I know that the industry was asking for clarity on what happens once the tax incentives, the benefits run out. And now it seems they might have something in place as quickly as September 2022.
Yeah, so I really need to understand what they're planning, because they didn't share many details, but it was at least positive news that they plan to have something that replaces the SEZ. Coming to your first question, I think I also am very optimistic about India's growth potential. As you know, this budget also recognized the role that entrepreneurships and startups are going to play in driving a sustainable growth in the future. And I, for one, belong to a part of the country where we are very excited with the advent of the digital economy, because we have so many digital startups and unicorns that it just seems to play to that kind of messaging, that it is about a digital economy. We've got to strengthen the digital infrastructure, the digital architecture, and we've got to basically focus on digital skill development. So I think that's the way even Karnataka is looking at the future, where they've actually come up with a Karnataka digital economy mission, which I think is something that I really believe in. Because technology, research, innovation, these are the areas that will give us non-linear growth. And I am very optimistic about the future. I think this budget does kind of, support this thinking. And let's hope that, as what Ashok said, let's make sure that we create the right avenues for investment. Let's focus on infrastructure. Let's focus on digital infrastructure as well. And let's then start really incentivizing our entrepreneurs and the whole startup ecosystem. That's the way I look at it.
Mr. Thiagarajan, you mentioned great that the push is on capex. You mentioned the benefits of the PLI scheme. You're hopeful that consumption will slowly come back. Where do you see the challenges then? So you need to unmute yourself. I think you've muted yourself. So
very clearly, as Kiran and Ashok mentioned, the first challenge from the industry point of view is going to be the execution effectiveness. I know it is improving. A lot more need to be done there. The second point is in quite a few sectors, again, both of them touched upon this was CI's pre-budget memorandum. We insisted this, that if you look at China, if you look at Korea, if you look at Japan, if you look at US, their GDP growth had a very clear correlation with the R&D expenses, both by the government and the private sector. It is abysmally low in India. So I think that GDP growth, manufacturing growth specifically, certain services growth will not happen without adequate investment in R&D. So therefore, this particular part of it, CII wanted a technology mission to be created, and they also insisted for the startups and others, the patent registration or the approved patents becoming collaterals. So this was one of the things that we have been asking for. So that is going to be the second challenge. Third, I think it is already visible in quite a few industries, huge talent shortage. I do not think that if we are going to sustain this 8% plus kind of a growth for 4 or 5 years, a lot more skills have to be developed with focus. So actually we have lost out on that due to the pandemic. Quite a few things didn't happen in skill building. So that is going to be another challenge. But otherwise, I see compared with in the past 2 years, there is significant improvement in terms of resolving the issues. That even in this budget, whatever are the issues, outside the budget, it gets resolved. I don't go by today's speech alone. And I'm again coming back to one thing. She didn't cover adequately address this point of the FTAs that are being negotiated. That is going to be a big game changer. We know for sure quite a few negotiations are in the advanced stage. That, according to me, is a big game changer. That is something which can happen outside the budget, that whatever is the implications that are going to arise out of that. Then the GST reforms have to take place. We are tinkering with that for too long. I think if the revenues are coming back, it is time that the government goes back to the drawing board to come out with much more simpler, rationalized GST structure. That can also boost consumption, by the way.
Yes, absolutely. Depending on which way rates head, I think there is some debate there on whether if you reduce it down to 2 rates and opt for a higher rate, because the effective rate right now is at 11.5%, I believe. And so the suggestion is that move more goods to the higher rates to be able to raise the effective rate. But we won't get into the GST discussion. It's not within the ambit of the budget, as we all know. Do you have any more details, Mr. Thiagarajan, on this law to replace SEZ? I know we spent, my colleagues in Delhi as well, spent a considerable amount of time trying to pull information out of the finance ministry, but we're not able to get a clearer idea of what this might involve, except that some finance ministry officials told us there will be more state participation. That's it.
I think there is no concern I have on that front at all.
Not concerned. Do you have any more information? I'm asking you if you have more information than we do on this.
No, I do not have, and we all learn from many sources. If at all, Ashok will have much more information. I know for.
Do you have any information?
I know on 5th we have an interaction with the finance minister, CI National Council. Perhaps we are going to get some more information.
You promised to ask my question for me when she's around, right?
Definitely.
On the SEZ policy. Okay. So I have just one last bit, because, there were so many small announcements in the budget, and I think I would have loved to have Ms. Shaw, but I believe we've lost our line on this. And the only place where I was seriously disappointed is I did think this budget would lay out a very clear fiscal roadmap to meet our COP26 commitments. We're running out of time on the climate change front, and the Prime Minister made some very aggressive ambitious commitments last year when it came to 50% of our energy requirements to be met by renewable energy, by 2030, that is. Net zero carbon by 2070. And Mr. Thiagarajan, this question goes to you because you are from the manufacturing industry, and this is now a very big challenge across countries. Do you think we're a little behind the curve on this, not in terms of the commitments, but in actualizing them?
No, I know from many other forums as well, the track to dialogue with EU or Kigali related, what is happening, or Paris related. I will not say we are behind the curve, but I do agree a lot of work needs to be done. So what is the context here? That look, the pandemic is something that has derailed us for such a long time. And I recall Pope Francis' analogy here. That there was a reporter who was asking him that what is the policy of Vatican about abortion. Now he was saying that there is a highway and there is an accident, and one after the other, so many trucks are stranded there. People are dying. Now you go and ask them about nutrition, yoga, how you will build health. So the context is different here. That the industry has to come back, growth will have to happen, investments will have to happen, sustainability should be a topmost agenda. We have to work on that. Now, my complaint is the PLI schemes. I mentioned to Mr. Piyush Goyal as well. They could have easily said PLI is subject to your manufacturing being a green manufacturing unit. So this is what UU is insisting, that green recovery is something that is very important out there. Now, I think as far as the corporates are concerned, we all will be one after the other announcing the net zero goals of ours. And the market itself is a watchdog for that. The ESG is gaining momentum, and people will be asking this question that, do you have a net zero goal? And I think most of the listed companies by next year would have announced at least the time frame, what they have, 2035 or 2040 or something. Now, the second part is with regard to the capability out there. It's not easy, you can announce, but there are a lot of things that needs to be done there in order to achieve that. I suppose there was too short a time. You will hear much more about this. I will not be surprised if there is going to be an independent ministry for this itself, or within the ministry, a dedicated focus. But I am very glad, even in agriculture, this subject has been brought in for the first time.
Yes, that's right. Maybe when, like Mr. Wadhwa says, when they overshoot their targets and they do have enough money, they will devote some of it to being able to plan the sustainability plan. Mr. Wadhwa, last word to you. Where do you see us on the growth curve? I know we've just come back to pre-pandemic levels, as Sanjeev Sanyal was also pointing out yesterday at the economic survey. How do you see the momentum going from year forward? You have a year to the ground closer than most of us.
Here's how I would define it. I'm glad we are back to where we were in 19. But I think with one big difference, this time we are back with 9% growth behind us versus the 3% growth behind us. Remember, the 18 to 19 was a wagon train that was carrying us from 18 to 19, whereas from 20 to 21 and 21 to 22 more particularly, there's a bullet train that's taking us on that. So hopefully, if the bullet train continues to maintain its momentum, it'll drive us to our destination. I remain hopeful that 9 point odd this year, 8.5. IMF says 9. Government says 8.5. Rare, isn't it, to see the government of India actually coming with a lower number than the global agencies. But I think we are on path to a consistent 8-9% growth rate, and hopefully the bullet train will ensure that we get to the destination. That's what really India needs. My own view is, the Prime Minister is now not seeing a $5 trillion economy in the next 5 years, but he's probably now thinking about $10 trillion economy in the next 10 years. One thing that came out so clearly in this budget, unlike in the past budgets, is that there is now no collision between politics and economics. prior to now, by now with 5 big elections in, kind of just around the corner and a big election in 24, we would have all said this is going to be a popular budget. The fact that this was not a popular budget shows that at least politics finds itself in a relatively stable position, and therefore economics can drive our growth, our natural destiny.
Okay, Mr. Wadhwa, Mr. Thiagarajan, you'll excuse me for being the cynic. I am a journalist after all. Maybe they're saving the political firepower and the populism for 2024. But we'll leave it there. Deeply appreciate you finding the time to come join us with your budget analysis, and to Ms. Shaw as well, who unfortunately I think had to leave. But thank you to all three of you for your time today.
Thank you.
It was a pleasure interacting with you, Menaka. All the best.
Thank you very much, sir. Thank you.
Thank you. Thank you.
Bye. See you. Good night.